Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how markets are digesting the progress of reopening. And Phil, we're finally here. Earnings season officially kicks off this week with the big banks, but more than 180 S&P 500 companies are pulling guidance, yet the markets continue to trade range bound to higher.
Yeah, there's a lot to digest there, isn't there? Obviously, the fact that a lot of companies aren't giving guidance just speaks to the uncertainty around earnings right now. And the analysts have wound down their expectations for Q2 earnings significantly for obvious reasons. A lot of companies were shut down. A lot of them weren't anywhere near full capacity. But the range of analysts' expectations is wider than we've ever seen before as well. So, there's a lot of dispersion across what people think the companies might report. It's going to be a real test to see what companies come out doing better than expected and worse than expected. It'll give us yet another taste, and this time a full quarter taste, of which industries have been more affected and least affected from coronavirus. And we've looked before at some of the retail spending data. We already know that some industries are actually doing pretty well out of coronavirus, and others have been particularly significantly hit and might take longer to recover. And so that's what we're going to find out this quarter. Is probably going to be the bottom of earnings. We know that the data has been recovering as people have been getting back to work in America and around the world. But it'll be interesting to see just how bad it is for specific companies and what the outlook is for the CEOs that haven't been giving guidance.
What do you think about continuing unemployment claims?
Yeah, so it's kind of interesting to see that the claims keep coming down pretty much like expected. But what it masks a little bit is what's going on with all these PPP plans and basically the assistance and the stimulus that's been put into the system to keep companies running and to keep people employed. It's actually even, I guess, more of a significant impact on the statistics in Europe, where a lot of countries don't look like they've had a spike in unemployment at all. But you can see even in the States, although unemployment officially is coming down, it looks like there's a lot of people on these PPP-style programs who are furloughed, who are being paid, but haven't yet been recalled back to work. And potentially the number of people in total that are not working or are underemployed is increasing still. So it just puts a little bit of a reality check on how bad the economy and the recession might end up being. And that's one reason why we had that little sell-off on Thursday last week. It was a bit of a reality check to see that there's not as many people coming back to work, not in as higher paying jobs as people had hoped, which kind of speaks to a slower grind back to normal than people had been originally hoping.
Let's get an update on the latest COVID-19 news. And the numbers here globally are just astounding. 13 million cases, over 500,000 deaths. The U.S. number one, which is not exactly where we want to be, the greatest in the world, but we in fact are topping 60,000 cases, double what we saw in New York City for April.
Yeah, and again, that's another data point that's not entirely reliable, because we know back in April there wasn't enough testing even to test the people that came in to the test sites. So a lot of people were interviewed, and if they were healthy enough to go home and sort of do bed rest, then they were encouraged to do that without a test. So there's probably a bigger spike in April than the data showed. But we can tell from other metrics, like the capacity constraints on hospitals in the southwestern states, that this spike is getting pretty close to the spike we saw in New York City and New Jersey area back in April. And we can see that it's already started to cause a downturn in restaurant bookings. More people are staying at home. Some of the states have actually implemented new quarantines in certain regions, which is going to affect the GDP in those regions. And not surprisingly, because this has been happening for 2 or 3 weeks, we're actually starting to see a tick up in the death rate as well, which shouldn't be surprising. It's just a bit sad that we know that COVID takes 1 week to mostly show symptoms, and probably 2 to 3 more weeks to either recover or cause mortality. And so we're now nearly 4 weeks into the spike in new cases. We'll probably see a spike in new deaths from those states as well, which is going to be a bit sad for the states, and it's something that potentially is avoidable, but it's an outcome from not having. We've talked about this before: the social distancing and adequate protections.
Now, if we take a look at ETF-Fund Flows from last week, not only did individual Chinese stocks outperform the market, but you certainly saw the flows in the Chinese ETFs as well.
Yeah, and remember Monday, we actually had a pretty good rally from the Friday before, if we're talking about a week ago. And that was off the back of the fact that the Chinese media started talking about how investors should be in the market, and China had a pretty good week on their market. So a lot of the ETFs that were in our top 25, most active or most increasingly active and performant ETFs are China exposure of one sort or another. There's a couple other trends that are pretty clear in that list as well, though. I mean, as gold's come back to multi-year highs, you can see that some of those precious metals and the miners of those metals were active in ETF trading as well. But also a consistent theme that we keep seeing is these innovation in the internet and online retail. You've got robotics. You've got all these sorts of new economy, work from home, thematic ETFs that are still trading a lot above average. They're seeing good returns and they're seeing pretty good asset growth as well. And I think if you want to sort of take a big picture view of why that's happening, you can look at the performance of the Qs, the QQQ, versus a lot of the large cap ETFs that are out there. And most of the large cap indexes are still down year to date. And it's pretty phenomenal. The Qs, which track the Nasdaq 100, are actually up nearly 24% year to date. So they're significantly outperforming the rest of the broad large cap market. And that's because of exposures to stocks like Netflix, which a lot of people are probably using, Microsoft and Amazon for online shopping, as well as Zoom, which is becoming a household name. So there's a lot of new economy stocks in that Q basket.
Yep, and we can certainly see that in our last chart here with the outperformance in the Nasdaq 100, which does incorporate many of those constituents.
Yeah, and that's been consistent, and it's actually been growing for the last couple of months. So you can see the ETFs that have been consistently more active in that new economy basket and thematic, sort of coming through in an extension of the Q's outperformance over time.
All right, Phil, thanks for joining us as always on Trade Talk.
Thanks, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.